Hi everyone, my name is Diaz. I am the Social Impact Lead for Banks at UNEP, and I'm here today to discuss with you what is the role of banks in shaping a healthy and inclusive economy. Now, before I begin, I actually want to know who is in the audience, so that will make things a little bit more engaging. It's just a show of hands. You don't have to come in front of the class and say who you are, where you're from, nothing like that. But I want to know who here is from banking. Okay, good. Insurance? Thank you, sir. I'm so happy you're here. Because we need insurance, for sure. We created resilient economies. Consultants? Good. And from other type of industries that are supporting the financial institutions? Fantastic. Thank you so much. Good to know. Now, from the banking specifically, who here works in social impact? Great. Now, the others, I guess, work on sustainability, maybe on the environmental side of things. Is that correct? If not, show your hand. Okay, so other sides of things. Okay, good. It's just that this is very important that you share back with the teams at home that have to do with social impact, with financial inclusion, financial health, gender equality, and other topics, what you're going to be learning today, so that they are very informed about this. And in the future, please also bring them to these events, because I know they're going to be very informative for them. Now, without further ado, let's begin. Here we go. Oh, they're right there. I'm just going to move a little bit towards here so I can see the slides. The slides are not just decoration. I really need them. Now, when we think about healthy and inclusive economies, I think it's very important that we understand why we are talking about this specifically. And the reason why we're talking about healthy and inclusive economies is that last year, UNEP, along with many banks around the world, created two very important documents that if you are not familiar with them, I invite you to go into UNEP's website, download them, and read them through. We have the Leading the Way to a Sustainable Future, where we present the 4 priorities for a responsible banking sector, and the Responsible Banking Blueprint, which walks you through how to actually implement these priorities and work them through. Are they just for banks? Well, it says banking sector, but as you know, all of you here are instrumental for banks to be able to become responsible banks. The 4 priorities are climate, nature and biodiversity, human rights, and healthy and inclusive economy. That is why I'm here to talk about that. Now, when you hear healthy economy, what ideas come to mind? And I want you to think about that. Now, a healthy economy, as we are defining it at UNEP, is resilient and it's diverse. When we talk about the economy being resilient, we talk about it being able to absorb and recover from economic, environmental, and social crises. When we talk about it being diverse, we mean that it can avoid dependency on specific sectors, promoting economic diversification and systemic stability. Now, when you hear inclusive economy, what ideas come to mind? An inclusive economy, we're defining it as one that is equitable and that is also accessible. And when we talk about accessibility, it's not just being able to access financial services, infrastructure, etc. It's also being able to access the opportunities available in the economy and seeing those opportunities grow. That is also very important. And equitable, it's about ensuring fair access to finance, employment, and economic opportunities by addressing structural barriers that limit participation. Now, I want to ask you something, and here's a second show of hands. When you think about your economies being healthy and inclusive, who here can say their home country is healthy and inclusive, has a healthy and inclusive economy? See, there's only one hand. And that means this is something that we definitely need to work through, because this is not just about the social impact. This connects with everything. Tomorrow we will be talking about the just transition and how to make the transition just, and this connects back to that. As we are transitioning, we need to make that economy healthy and we need to make it inclusive. When you work on healthy and inclusive economies, you're also supporting 4 major SDGs. You're working towards having no poverty, you're working towards gender equality, towards decent work and economic growth, as well as reduce inequalities. But this is the direct ones. Indirectly, you will see the rest of the SDGs in there. Now, a bank might ask, okay, Laura, this is fantastic. So, we need to create economies that are accessible, diverse, equitable, resilient. But how do we do that? And here are 4 areas of impact that you're very familiar with, that you're already doing work on them, and that when you work on them holistically, when you involve not just your internal ecosystem, not just your customers and clients, but also your external ecosystem and your value chain, you can generate this type of impact. You can shape the economy to be this way. So as you work on financial health and inclusion, as you work on gender equality, as you work on affordable housing and decent work, you will be on your way to that desired impact in the real economy. And a special note here with affordable housing. We do have guidances that talk about financial health and inclusion as well as gender equality. The most recent is the gender equality one being published last December, so if you don't know about them, wink, wink, please go online to UNEP and you can download them and read them through. They are what I call the Bibles of those topics because we made them with banks, for banks, but invited the external ecosystem of the bank to be able to give feedback on this. But on affordable housing, we don't yet have a guidance, but this is something that I wanted to say here. Affordable housing, it's all about having housing that is not just affordable, but also adequate and secure. And the definition of adequate housing has changed given the climate crisis. So it's very important that we also consider that into here. It's not just that the person is able to pay the loan or be able to pay the home or pay rent for the home. It's also that the home is climate resilient. It's also that the home has the basic utilities and that no one is going to take that home from them, which will be the part of being secure. It's important to take that into consideration. Now, what are the key opportunities to strengthen resilience, equitability, and all the other 2 dimensions that we have on healthy and inclusive economies in this region? And for that, we prepared a quick regional diagnosis. Now, very important here, full disclosure, this is not a fully exhaustive diagnosis. When you do your context analysis, and the PRB banks are very familiar with this, a context analysis has way more than the numbers that I'm going to show you today, right? But we wanted to paint a picture of what's going on, but instead of looking at it as barriers, look at it as opportunities for your organization. First off, economic resilience. So we're seeing that 86.3% of employment in sub-Saharan Africa is informal. Informal economies represent around 22% of GDP in many MENA countries, and what happens with informality is these are people that are not joining the formal system of pensions, for example, or social security, etc. So they are way less resilient than an employee that their employer are paying for all these things. So it's very important to think into this. Or independent workers are actually formalized and they are paying for these elements. Less than 30% of adults can access emergency funds when needed. This is a way to measure financial resilience. And those emergency funds can come from different places. They can come from families, so the social capital of the person, that counts there. Microinsurance, we were hearing about microinsurance in a session before today. Microinsurance also counts in here. If they can make the person more resilient to be able to face a shock in their lives that requires an economic answer, that counts. A quick credit line at a discounted rate, interest rate, things like this, or they have savings. All of that adds up into resilience. But sadly, sorry, my brain is thinking in Spanish for some reason, so that's why you will hear me like that. But it's because it's error 404 in my brain. So it's important to understand that those elements make someone more resilient, but what we're seeing in the region is that not many people is actually considered financially resilient. So that's very important to work on. Affordable housing, sorry, I think that, yeah, there we go, exactly. Insurance premiums represent only 2.4% of GDP across most of Africa. So there's a lot of room to grow in there, especially with the microinsurance aspect. Remittances account for over 5% of Africa's GDPs and nearly 7% in MENA, but we really cannot rely on that income as something sustainable in the future. Limited pension coverage and weak safety nets leave many informal workers vulnerable to shocks. Most pension systems in the region are not prepared for aging populations, and participation still remains low. Now, this issue of the population getting older is something that is being faced by many regions around the world. We do know that the region here in Africa and Middle East actually has a lot of younger generations still going going strong. But the problem with an aging population is all the weight, economic weight that it has on the state and on the other generations. And so if this is not something that we tackle soon, then you'll be seeing yourselves the same way that Asia is right now facing the pension crisis or having non-resilient elderly in their countries or Europe, etc. So, just learn from them and don't go and do the same mistakes is a little bit what I'm saying here. Now, with economic diversity, economies remain highly dependent on commodities like oil, minerals, and agricultural products. Are agricultural products bad? Not at all, but we just cannot rely completely on them, especially because they're not really attracting the younger generations unless we are bringing innovation into the sector, unless we are creating more technification, unless we make it more digitalized. Research and development expenditure is below 1% of the GDP. African startups are seeing 46% funding decline. We saw before today that we really need funding, we really need credit and loans, etc. for the MSMEs, for the startups, so that they can grow into the potential that they have. So that's part of this, that gap is part of this. Youth unemployment in MENA reached 24.4%, which is almost double the global average. Youth unemployment in sub-Saharan Africa, even though it says that it's 8.9%, it does have a 21.9% of young people that are not employed, nor in education, nor in training, which are called the NEETs. Who here knew about the NEETs? Now all of you know about the NEETs. In Spanish, they're called NIMIs, by the way. But with the NEETs, this is very important because that is a whole segment that you can tap into potential with training programs that can lead them directly to employment. Employment in the industries you're helping diversify, with the new sectors that you're helping bring into the economies. We're going to be talking more about that tomorrow in the Just Transition session, so feel free to be here for that session as well. And finally, industrial policy and financing systems continue to prioritize traditional sectors over the high value innovation. It goes hand in hand with really not having that much percentage of the GDP going into research and development, so important to direct more efforts towards there. With economic equity, 45% of adults in sub-Saharan Africa and 52% in MENA do not have a formal bank account. So we definitely need to push more into inclusion for having a basic bank account, but then beyond that, having access to that product, financial product or service that makes sense for the financial needs of the customer. Women are 9% less likely than men to own a bank account. Affordable housing remains scarce, especially in urban centers. Informal workers often lack access to pension systems. Structural barriers persist for youth. And I think you're starting to see a trend who should be prioritized in the region. And finally, accessibility to the economic opportunities. Only 36% of African population uses mobile internet. Rural gaps still remain high across the MENA region. Access to basic infrastructure like water, electricity, and transport remains limited in many areas, which makes housing in those areas not adequate. Only 25% of SMEs in Africa and 30% in MENA report access to formal financing. We talked about that gap. And if that gap keeps growing, remember, SMEs employ more than 60% of the workers in a country. So if you're not financing them and they just crash, guess what happens to those jobs? Cash remains dominant, limiting digital financial inclusion. And education to employment transitions are weak. We mentioned that, and that is definitely helping the unemployment for youth be that strong. Now, what are we proposing? So we see all these opportunities, and there are so many in there. I think I spent like 20 minutes just talking about that. But where to put your focus? What to prioritize? And here is my humble suggestion. How about focusing on boosting inclusive financial services for individuals and MSMEs, but really understanding their financial needs. The other day I was sitting down with a bank, and they were so proud showing me their strategy for one of their segments. And I said, this is great, and how do you know those are their financial needs? And they said, we just do. And I said, do you ask them? Do you do a profiling? Do you sit down with that segment to understand that, yes, that's indeed what they are not seeing that they can have access to? And they were blank. Don't have that blank face. Please sit down with the segment, with the customers, understand their profiles, understand their financial needs, and as you understand them, you will then have a product offering that's going to make sense and be relevant for those segments and help them grow and become financially healthy. Close the pension and old age resilience gaps. Who here knows about the silver economy? everything. You should be coming here. See, that's a great consultant right there. He knows all the answers to me, so go and talk to him in the next break, please. Now, silver economy, in a very simple way, is how you organize products, services, etc. to serve the elderly. So we're here talking about financial products and services, but also how we are protecting the elderly in their financial lives as they grow old. Silver economy has many, many opportunities available when you're seeing a growing elderly population. And so in here, we can start those innovations as I was inviting you before and see, of course, the opportunities that come with serving that part of the population. Advance gender equality through inclusive credit and leadership. In the guidance that we just published, we're talking about 4 outcome areas for gender equality to work on. And I see that we have different banks that helped us with this guidance, especially Access Bank over there. Hello. We're saying that you need to work your internal ecosystem to make your leadership and your work environment be gender responsive. We're saying that you also need to work with your customers so that they are healthy and inclusive, financially healthy. You need to also work with your ecosystem so that they are meeting gender criteria. And you need to work also with your corporate clients so that they meet gender criteria. So all those 4 things are suggested. And here we are supporting that again and just making emphasis that that's the way to go. Strengthening digital and blended finance to unlock new sectors. And those new sectors, as they are being unlocked, then you're going to grow your youth employment. And that's because symptom of an economy that is not well diversified is the youth unemployment. The higher it is, even if the GDP is growing, you're not really growing the right way. You're not growing in an inclusive and healthy way. So that's important to look into. And finally, promote innovative, affordable housing finance for the underserved markets. So affordable housing, for sure, should be a priority in the region. Now, I have an invitation for you. If you could read QR codes with your phones, this would just take you directly to my posts and activities on LinkedIn. What I would like you to go and do there is, in the last post that you see from me asking this exact same question, in the comments, please let me know what you think financial institutions in your country should do to create a healthy and inclusive economies. With your answers, of course, we're going to take all of that information to create better guidance through the community of practice on healthy and inclusive economies. And for our member bands and PRB that are here, if you haven't joined, let me know so that we can put you on the list for that. And now, without further ado, and here I definitely need to switch to, you can switch now, Melissa, to, thank you very much. I want to invite the panelists that we have today, because I feel that now we're on the same page for understanding what we're talking about when we say healthy and inclusive economies. So now I would like to have here joining me on stage, Njideka from, sorry about that, Njideka from Access Bank. She's the group head of products and segments at Access Bank in Nigeria. She leads a portfolio serving over 60 million customers and manages 6 trillion Naida's balance sheet. That's super impressive, honestly. She's launched, she has created with her team and spearheaded, please go ahead. She has spearheaded the launch of Nigeria's first wealth management app and growth, Access Bank's digital lending portfolio to more than 90 billion nairas. And beyond the numbers, she's a champion of inclusive innovation from agent banking to gender-lens products. Thank you for being here. Next, we have Roselyne, Njino. I'm sorry that I'm mispronouncing some of the names. These are very new to me in my language. Senior Sustainability Specialist at the Kenya Bankers Association. She has led national programs on sustainable finance, green bonds, and financial inclusion through the Inuka SME program. She has helped train over 100,000 entrepreneurs, including Kenya's first financial literacy initiative for the deaf business owners. Her work is shaping how banks embed social value in day-to-day operations. Thank you for being here. Then we have joining us from South Africa, we have Professor Stephen Mago. He is the head of development studies at Nelson Mandela University. Stephen is a leading voice in development finance, rural entrepreneurship, and inclusive economic policy. His work bridges research, policy, and grassroots impact, and he brings a powerful systems level lens to the conversation. Thank you for being here, Professor. And last but not least, Dr. Tonna Ezema. Tonna. She is the head of sustainable banking at Fidelity Bank in Nigeria, with a background in environmental management and over 20 years in banking. Tonna leads Fidelity's sustainability agenda, focusing on green finance, financial inclusion, and community development. She's also a certified expert in sustainable finance and cost management, driving practical change from the inside out. Thank you again for being here. I hope I didn't take that much time, but I think we're going to have just enough time to do a fantastic panel today. And without further ado, let's just dive in. Now, the idea is that you walk out that door today after the session, and the session that comes after, if you want to be down, please don't leave. And that you understand what is the role that banks have and how your organizations can help that role that the bank is going to have in shaping a healthy and inclusive economy. And to begin, then, my first question is going to go to Roselyne. And Roselyne, from a sector-wide perspective, how do you see the role of banks evolving to build healthier, more resilient, more inclusive economies?
Thank you so much, Laura. It's a really good question. I'll begin by thanking you for this opportunity to advance one of my passion topics, financial inclusion. Yes, banks do play a very significant role in terms of advancing a healthy and inclusive economy. And I would say one of the roles that they can play is building capacity of their different segments for the unbanked and also the underserved segments, just to build the capacity to be financially literate, which improves the health of the MSME, if it's an MSME who's underserved or underbanked, and definitely reduces the information asymmetry that currently exists. What we've seen from KBA's experience through our program that we run called the Young Enterprise Program, it's a program that builds capacities of MSMEs in terms of helping them to be de-risked, to enhance the ability to access bank finance. This financial literacy program has helped MSMEs be formalized, because we realize that without formalization, you're not able to be tax compliant, you're not registered, which locks out a lot of opportunities that you could be actually tapping into as an SME who's looking towards scaling. So beyond that, we also support in terms of helping them to expand their market reach through this financial literacy training. And this, of course, helps them to be more profitable and to also create more jobs for Kenyans. And these underserved segments also we've seen being supported, let's say persons with disability. We actually had a partnership with Stanbic Bank back in Kenya, and we conducted the first financial literacy training for deaf MSMEs. And the bank went a step further and came up with a social loan product where they're extending credit at 1% interest, which I've not had before. And it really greatly supported that specific segment to actually access affordable credit. Beyond just issues to do around financial literacy and building capacity of MSMEs, we believe technology is the future in terms of ensuring that there's deepening of financial inclusion. So what we've seen as in Kenya, the mobile penetration rate is around 72.6%. Actually, majority of Kenyans have smartphones, right? Mobile phones which are smart. And banks are taking advantage of this and coming up with very specific mobile channels just to see how best to support the underserved segments. So it is easy for any person who is at home to actually open a bank account. Even the transaction costs are quite low, and it's actually enabling some of the segments to be included. So we're leveraging on technology to expand our market reach as banks back in Kenya, and we're able to reduce the cost as a result of leveraging on technology. Thank you so much, Laura.
Thank you for that, and I think that the loan came from understanding the segment better through the capacity building trainings that you were doing for those entrepreneurs. And that is actually a great place to gather information through your financial education programs and the NGOs that are helping you with that. It's very great how you can better understand the segments and then start creating products that make sense to them, their realities and their financial needs. Njideka, going to you now. Through initiatives like the W Initiative, how has Access Bank helped strengthen resilience and diversification? What lessons can others draw from that?
Thank you very much, Nora, for inviting us. And women is what we're passionate about in Access Bank, especially for me. What we have an initiative, which is the bedrock of our women business. We call it W Initiative, that caters solely for women. So we found out that we need to treat women differently from the way we treat other businesses that we run with. Financial literacy, especially for them. We have to teach them financial literacy, how to bank. And we put the women in different categories. We have the financially excluded women, and then we have the women that are the main SME women-led businesses. So what we've done is to create loans. So we created loans that are not based on collateral, because we found out that women, most people, not just women, find it difficult to bring collaterals for lending. So what we did for them was to lend to them based on their cash flow. So we developed a digital lending platform strictly based on cash flow lending. So we take stock of what you have and lend to you based on your needs using our own credit scoring method. So we have developed a credit scoring method that helps us to determine how much you should get based on the size of business that you're doing. And as you scale, we're able to give you more funding as the need arises. It's very important for women also. What we also did for them, apart from giving them loans, we've been able to do financial literacy. So across our about 600 locations, we have women hubs at the branches where you can go in. You have a separate place that we can attend to you and speak to you. And we have, on a monthly basis, across different geographical locations where we have what you call SME clinic, and it's specially designed for women. So at those clinics, we look at their businesses, we find out what the challenges are, and we're not trying to put in a lot of women into the same cluster. We get like 10 or 15 women, so it can be personalized one-on-one conversation with them based on the businesses that we're focused on for that period. So if you're focused on agribusiness, we invite you to go to those locations and you have an expert talk to you and dimension your business and find out how to help. Apart from that, we also have radio programs for capacity building for women across the country, also a little bit based languages, so which we make sure that those sessions have to deal with the languages of the regional base, on a regional basis. So that makes it easier for women to discuss their businesses. We're not going to put 1,000 women inside the room and start trying to dimension what their business looks like. So taking it in bite sizes for us is good. And then we're not trying to do a one-size-fits-all. So we take, based on your business, you're a baker, there's a different criteria for you. So we put businesses in buckets as we're trying to develop products for them. Because one of the things we found out is most banks will put everybody, most of us bankers actually, will try to put the loans in one bucket. So you develop a type of loan and you believe that that loan will be enough for all the markets, and it's not that way. So there's a new emergence of agribusiness in Nigeria. So one of those businesses for women, we've started taking a deep dive into what we can do for women, especially smallholder farmers across the country. So for us at Access Bank, women, very important to us. They're the bedrock of the economy at the end of the day. I think the men will agree with that too. So we try to make sure that we treat them differently. We make sure we listen. And like I said, most especially, we don't bring up products that are one size fits all. So for us, it's very important at Access Bank, and women are very important to us. Thank you.
I wanted to clap as well. I was like, oh my God, yes. It's really all about meeting them where they are in their reality and making products, services, and channels relevant. And that relevancy, it's all about, what is it exactly that they need and how do they need it and through where do they need it, right? So going with the radio, understanding that not everyone might have a phone or internet connection so that they can get it. We've seen that one in rural areas, not just in Africa, but also Latin America, and it works. And once they get more access to mobile phones and WhatsApp, we've seen courses being sent through WhatsApp and different innovations that way. So kudos to you on that work for sure. Now, moving on, Dr. Ezema. Fidelity, I can give you, okay. Fidelity's work with MSMEs and women entrepreneurs focuses on economic resilience. What impact have you seen, and why does it matter for overall economic health?
All right, thank you for the invitation, and good afternoon, everyone. We've made a significant impact in the area of targeting MSMEs and women entrepreneurs with financial products and services that are not only relevant but also accessible to them. For us in Fidelity Bank, what we did was to understand the challenges that are peculiar to segments, and what we did was to come up with products that will be able to meet their needs. So for women entrepreneurs, we found out that one of the issues was financial literacy. They didn't have digital skills, and that means that even when we come up with our mobile banking solutions, they are not able to access our products, our banking services. Another thing is that because of geographical inequality, so where they are located, the level of infrastructural development will be it's kind of different from those within the cities, and those within the rural areas are not able to have. So when for example, if you have mobile banking platforms, because they don't have access to electricity, they are not able to charge their mobile phones to be able to access banking services. So what did we do? We had to increase the number of agents, you understand, that we partner with as a bank to be able to reach areas that are not easily accessible, or reach women entrepreneurs that won't be able to access our banking facilities. So at present we have over 35,000 agents in Fidelity Bank, and a whole lot of over 7,000 POS terminals to be able to get these women and get MSMEs to be able to access banking products and services. We feel it's very relevant because these segments are very crucial to economic growth, and it's very important because they provide employment opportunities. And now we realize that these segments are very key to the economy of Nigeria, and that's why we focused a lot on these segments. We also believe that they are crucial to economy diversification, rather than a focus on a few key sectors. Focusing on these segments is very, very important to ensure that there's diversification and we're able to withstand shocks in the economy of Nigeria. So we see that as contributing to contributing to a healthy economy, and also inclusiveness in terms of financial inclusion.
Thank you for that, Doctor. Indeed, it's something that is important here is you've seen that these organizations have used financial literacy as a tool. It is not an end. It is not the only thing that you do as a financial organization and then you say, I created a healthy economy because I do financial education. No, you do financial education so that you can see results in the financial health of your customers and the communities that you work with, and then that in turn is going to help businesses be more financially healthy, etc., etc. So important to not just stop at I gave financial literacy to this many people, but actually, like these organizations, see the results in their finances, seeing their finances improve, and them being more financially healthy. Now, please don't get crazy with me. Given time, I'm going to have to cut some of the questions. But I'm going to just quickly go to Roselyne, to Professor Stephen Mago. The question for you is, from a systemic, no, wrong one, sorry, small letters. From a systemic perspective, what structural shifts must banks champion to build healthier, more inclusive economies?
Okay, thank you. Thank you for the question. Okay. In our discussion, we are focusing on the condition of the banks to see what kind of strategies can be put in place for them to be healthy. In the morning, in the plenary, there was a focus on collaboration, which I would want to start with. You'll find that it's important to have a strong collaborative ecosystem. Because without an ecosystem, that's where we have institutions that are competing, and competition is always a loss. Because you invest a lot of resources into competition. If those resources were to be put together, they will help all the institutions and individuals. So we split the value of probably the global economy or the region by investing in competition rather than investing in collaboration. It's more, you're going to get more results through collaboration than competition. So, what banks need to do from an academic perspective, because I'm coming from a university, you find that there is always a disconnection between academic institutions and industry. So you find there is no relationship between banks and higher education institutions, for example. Yet, higher education institutions, they are the hub of knowledge, so they can carry out research, and that research should be able to inform decisions, policy, etc. So that will help to strengthen the banking sector. I can give an example of from our university where I am teaching. In my department, we offer programs like development studies from undergraduate to PhD. Then we offer development finance, diploma, masters, and PhD. So those are the programs. We also offer maritime studies, diploma, and masters. So you find that set of programs, they've got something to do with the inclusive economy, they have something to do with inclusive development. I also host 3 postdoctoral students who are researching on financial inclusion connected with SDGs, how financial inclusion can be used to promote SDGs. So those are some of the issues that they are researching on. But the main focus, the first postdoctoral fellow is researching on localizing SDGs. The second one is researching on solidarity economy, and the third one is researching on climate finance. So those 3 postdoctoral fellows, they are chairing publications such that, you know, we received 2 awards 2024 for the best researchers in the university on that. So those results need to be used by the banking sector through collaboration. And also universities should be able to attract, for skills development, they should be able to attract individuals from the banking sector to train them on issues of financial development. Yes, and bring theory together with practice. It's good to be a practitioner, but it's also important to come to a higher educational institution and sharpen your skills. So that collaboration, I see it, is very important. So that will help banks to develop, for financial inclusion, they also need to look at the digital transformation as things change, but this can also come as a result of improved research. And also, they need to develop sustainability-linked lending models that will also help to promote sustainability. I remember I've got a paper that I wrote on cattle banking. I'm not sure whether we have a bank that is practicing cattle banking, because for the rural communities, they have cattle as part of their assets. How do banks participate in making sure that it's part of the banking assets? Cattle banking, there is a challenge for you, right? And also asset-based banking for rural communities. So those are some of the strategies that banks can also shift to promote financial inclusion. And also one of the panelists talked about AI this morning, AI and big data. How can that be used for credit scoring? How can that be used to manage farms, etc. And also financial education. One of my colleagues here talked about financial literacy. So financial education, it has to be integrated in the educational system of the financial institutions. And that also comes from the banks. So if there is that collaboration between banks and higher educational institutions, they can actually help educational institutions to develop programs that fit the industry, so that disconnection will leave educational institutions developing programs that do not fit industry. So there is need for that collaboration, working together, so that we have programs that are fit for purpose, that can fit the industry. So those are some of the strategies. They cannot be exhaustive, but it's some of the ideas that we can try to explore. Thank you.
Thank you, Professor. And actually, those are very good ideas. That connection with the academia and the banking industry. I know that the different banks are working with the universities into non-traditional data for credit lending, right? And how to really garnish the social capital of a person by, let's say, the number of contacts they start adding into their phones or things like this. So there are different ways in which you can innovate by joining efforts. So that's very, very important. Thank you for mentioning that. Now, I asked the speakers when we were working through the briefing to think about a world in which their organizations didn't have any restrictions, no barriers. They had all the budget in the world. What would be the type of innovations that would come out of their organizations? And so I'm going to start with you, Tonna. What would come out of Fidelity if you did not have any constraints whatsoever?
Okay, I think the first thing will be to have like an all-in-one digital platform that incorporates e-commerce tools, invoicing, inventory management, which can easily be accessed by MSMEs and also women entrepreneurs. Because these tech solutions are quite expensive, and for them to be able to achieve operational efficiency and also for them to be able to compete, it's very important that they have access to such resources. Another thing will be to see if, like having a women-centric innovation lab where women can experiment with business ideas and they can create prototypes and also test before they, test it in the market before they scale up. I think it's very important for them to be able to have this in place. Another thing I would also want the banks to consider would be trying to link these women with global leaders, as in women who are talking about women entrepreneurs now, people who have been very successful, to be able to, so that they can offer guidance on how to overcome barriers. We are doing that in Fidelity Bank, but it would be good to also include not just local experts, but also international experts, since we want them to be a bit more competitive. Another aspect would be the area of capacity building and expanding beyond financial literacy to include other advanced topics like investment or debt and equity financing. That is very, very key, because the focus tends to be just on basic skills, basic financial literacy skills, but it's very important that you're able to understand something much more advanced for them to be able to compete. Then one very important thing is linking them with the international market, trying to create that platform where you have global global buyers that are interested in our products, Nigerian products. So the bank should be able to create that platform where you bring them together and match them with these people. So I'll just stop there.
Thank you for that. There's actually a fintech coming out of India that's created that marketplace for banks. So it's connecting your own corporate and business clients with their inventories to achieve just that. Njideka, how about you? Access Bank, what would you do if you could have all the money in the world?
I'll speak to just one thing. So, financial inclusion. We have a strong agency banking network. We have about 720,000 agents. We have 774 local governments in Nigeria. and we have one agent per local government. So for me, from a financial inclusion perspective, scaling the agents to 2,000, that's number one. So you have more agents at the locations. Making sure that their app is working, that's one of the challenges we've had over time. You know, downtime, no lights, it's an issue. So if their app is working, we'll reach more people. To be sure that those people that are underserved, not even served in the first place. When you spoke about cattle banking, I understood it a lot. In the north, we have markets in the north where they don't do anything but cash transactions. So we have agents at those locations. So if we scale our agency banking network from 720,000 agents to about 2,000 agents for starters, and then we partner. So one of the other issues we have with those financially excluded areas are lights. So we partnered with a solar company to make sure that they have just small lanterns, just small lamps that they can put lights in their houses. So that means that the agents are able to transact later than 6 p.m., nightfall. That means the community can gather at the agent location and read. So the children are able to do their homework and they're able to read with the solar that we've partnered with a company to make sure that they have solar. So when we partnered with them, we were allowing the agents to pay installmentally over a period of time, but we've started giving them a little bit access to credit to ensure that they are able to pay for those lights. It also generates income for them because people in the village go to the agent center to charge their phones. So for each time you charge your phone, we charge you what we call 50 naira in Nigeria. That's a little bit of money for charging. So for me, for Access Bank, financial inclusion, partnership, scale the agency banking, that will make it easier for the country as a whole, actually. Thank you.
Does this work now? Thank you for that. That is very inspiring, both of you. And I'm actually going to go to the next segment of questions very quickly with you two. Thinking about, this is what they could do if there were no barriers, no obstacles, and no challenges, but there are, right? And so I'm gonna ask you, Roselyne, what regulatory or ecosystem barriers are still holding banks back, and what changes could break them?
Thank you for that. I believe poor fiscal policies, especially punitive taxes, does affect and erode efforts towards financial inclusion. Like in Kenya, if any tax has been put in place towards banks, the cost is usually borne by the borrower or the consumers of banking products. That, of course, deters these segments to actually be banked, or even leads to underserving these segments who we are trying to ensure that they are financially included. So I would say to create an enabling environment, you have to look at the tax treatments, even introduce tax breaks, especially for underserved, underbanked segments, see how best they can be supported. Even if you could just even make sure that they're not paying any form of, maybe a very reduced tax rate, that would, of course, ensure that they are interacting with the banking products in a more efficient, seamless way. So it will definitely deepen financial inclusion. So I feel that is something that needs to be done. Then in Kenya, we do have the Movables Properties Rights Act, which is enabling banks to actually ensure that we're able to look at non-traditional collateral, likes of livestock, beyond livestock, even furniture, and you can leverage on that to actually use it as security as a borrower to actually access bank finance. I think there's been some challenges around that specific act, given that there's some risk perception around it. So I would maybe create like an enabling environment to actually make this specific act to be operationalized, because I feel like it can actually scale in terms of reducing that burden of SMEs, or not just SMEs, but underserved segments who are not economically empowered to actually own land, which is the preferred mode of collateral for banks. So maybe I would encourage maybe for different countries, look for ways of just making that specific initiative more easier for uptake. Thank you.
Thank you for that. And now, Professor, what challenges do you think are blocking progress the most?
Okay, thank you. The challenges that are blocking the banks to be flexible and moving forward. One is infrastructure. infrastructural development. But now, technology has taught us that we can do without the four walls. So it's an advantage, but it's now a challenge for them to invest in technology. Some of the banks may not have enough to invest in technology, especially in the excluded areas like the deep rural areas, where people do not have electricity, do not have access to electricity, so they cannot be connected. They do not have access to good roads, so they are poorly connected. So banks are not free to go to visit those areas, so that remains a barrier. And also, like she raised the issue of policies. That's why the government is also part of the stakeholders that should be seated here, so that we can negotiate to say what needs to be done in terms of policy. So there should be a connection between policy and the discussions that are going on here, because the government has got that responsibility to change policy, to change the environment where the banks are operating in. So they need to be given that opportunity. So yeah, so for me, those are some of the issues. And the last one, from an academic point of view as well, is the lack of training and that kind of collaboration in order to share knowledge, because it's important to carry out research and make sure that everyone is informed. And for example, we carry out research on behavioral economics. So behavioral economics, how do clients behave? How do rural people behave? What is the behavior on insurance uptake? What is the behavior on loan uptake? All those things. So it's important to understand the behavioral economics so that you can be able to service the customer, the clients. So the banking sector needs to consider that shift.
You just touched on an amazing point. Behavioral sciences. That is where we're seeing the trend going globally. Banks even created their own internal centers for behavioral sciences to better understand their customers and how they react and how they can nudge them into decision making that is going to improve their financial health. Again, it's nudging them for something positive for them. So we need to also improve how we are measuring that we're actually creating that better financial health for the customers. Not just that we're doing it, but that it's happening. Okay, that's also super, super important. Now, final lightning round in honestly less than a minute, otherwise Melissa is gonna kill me. One action that you think the people that is sitting here in the audience can go and do after this conference to help shape healthy and inclusive economies. We'll begin with Professor, but remember, less than a minute. Go.
A collaborative ecosystem.
Great.
Innovating, look at thematic bonds as a way of channeling financial flows towards social issues and social inequality.
And working with the ecosystem. That's better.
Mine will be having a comprehensive support ecosystem, because it's one thing to provide financial services, but then you need to have an holistic approach. You provide targets, you provide financial products and services, but also provide capacity building for people to be able to access the products and services. Another very important thing is to look at the overall health and wellness of the people that you're targeting. So for us in Fidelity Bank, we incorporate a whole lot of wellness and health webinars to ensure that we have healthy clients. Thank you.
Thank you, Doctor. Well, I hope that after this session, and thank you so much for my panelists for everything that they shared today with us. We had to cut some of the questions, but feel free to reach out to them throughout the different coffee breaks tomorrow or lunch breaks. But I hope that after this session, you leave thinking, okay, this thing, healthy and inclusive economies, is not just an abstract ideal, but actually it should be a strategic imperative of my organization. And that hopefully you also found out how your organizations can help banks and other financial institutions shape healthy and inclusive economies, and that you added it through the QR so I can read your answers, since we really didn't have time for me to go table by table and understand what your answers are. Now, based on really raw calculations, working on those 5 priorities that we shared with you, this could unlock close to $200 billion in opportunities for the banks in the region. I think the number it's quite interesting, and that's like the minimum that we're seeing that could be realized. So who's gonna lead in capturing that value? I wanna see what's coming next. Thank you so much.